it appears that we're on the right track right now. I'm State Representative Joe Jefferson, and of course would like to welcome each of you to our meeting this afternoon. We'd also like to welcome the members of the Banking and Subcommittee Affairs Subcommittee members this afternoon, as well as all L.C.I. committee members and guests. We have one bill to take up at this time. This is Senate Bill 425, which was introduced by Senators Alexander, McLeod, Young, and Gustafson. This bill authorizes reporting of financial exploitation to Adult Protective Service and the Securities Commissioner. Hold on disbursements for up to 30 days with limited authorized extensions while the financial exploitation report is investigated, and immunity for financial institutions and professionals acting in good faith who report suspected financial exploitations. With that in mind, we do have certain individuals who would like to make presentations at this time, and the first person we're going to call on Mr. Neil Rashley, who's with the Bankers Association. Mr. Rashley?
Thank you, Mr. Chairman. I'll try to be as brief as I can, mainly because that summary was excellent. So frankly, that's a pretty good summary of the bill. Neil Rashley with the South Carolina Bankers Association. I did want to share with the subcommittee a little bit of the need for the bill. Many of you have probably experienced either in your own personal lives with loved ones, or you know other people who have been exploited by others due to their age, financially exploited. There are many tools that banks and law enforcement have to combat that. This bill adds yet another tool that banks and others in the private professional sector can use to hopefully combat it even more. Some quick statistics from the banking side. 70% of deposits in America are held by people 55 and older. So you can see it definitely weighs more towards the older side of the spectrum. Banks normally are required to file what are known as suspicious activity reports to federal regulators and law enforcement so they can track fraud. Some of the latest statistics of that in 2017, bank filers reported $1.7 billion in elder financial exploitation fraud. 1/3 of the exploited elderly were 80 and over, and the average loss of those between 70 and 79 is $45,000. So we're not talking about losses of a couple thousand here and there. We're talking some pretty significant losses for a number of people. Banks naturally do a lot of employee training. We even work with customers and other community groups on how to identify these things. What 425 does is it provides banks, and if I could, Mr. Chairman, there are two parts to this bill. The first part deals specifically with banks. The second part deals with what are known as broker-dealers in the securities industry. And we have some representatives with them in the Attorney General's office that are going to speak to that part of the bill. But they're really almost identical. They just have some provisions that are particular to their industry. But essentially what the bill does is it allows the bank to be able to slow or even stop a transaction if they suspect elder financial abuse is going on. That can be identified either through personal contact, through seeing a series of transactions go on before the banker. Banks even have software behind the scenes that can analyze transactions and see, wait a minute, something is happening here. So 425 allows the bank to slow or stop the transaction. It does not allow them to do it indefinitely. They have 30 days. I guess really the way the bill works is they have to let the transaction continue if one, as soon as they find out there is no abuse, or two, 30 days have gone by, or three, law enforcement can ask for an additional 25 days to put it up to 55 to continue investigations. So it's not an indefinite hold. And that's important because you're also having to balance the interest of essentially the depositor, the account holder, to be able to access their funds, because that's what the bank is doing. They're slowing down the access to funds. So you have that provision on the timing. You also have to give notice to the account holder that you are doing that. If by chance it is a joint account and the suspected perpetrator is someone who is a joint account holder, the bank does not have to give them notice. In other words, if they're the perpetrator, they don't have to tell them, by the way, we think something's up. Finally, and really what's kind of the key to this is that there is a qualified immunity from liability provision. A number of states have been passing this bill, about 20 or so. They all have this provision, and that is if you are slowing somebody's transaction down, you're technically denying them access to those funds right there, not all funds, but to those funds. And this provides you qualified immunity as long as you are in good faith acting and you have reasonable evidence in front of you that it has occurred. I'm going to leave it at that, Mr. Chairman. I know there could be some questions, and as I said, there are others here for Part 2 of the bill concerning the security side.
Thank you so much, Mr. Rashley. Are there any questions? Yes, sir.
I'm just curious, during the investigation period, can banks or broker-dealers levy fines or any penalties, like something that for going through the motions of this investigation, or is that not part of this legislation?
No, sir, it's not. I'll speak just to the banks, but I feel pretty good that just being part of the private sector, we don't have any authority to do that or to say done somebody's account for having them go through that. Frankly, Mr. Cogswell, I mean, it sounds like an interesting question, but I guess it's just a part of the doing the business of a bank is that you have to investigate suspicious transactions, and there are going to be costs involved with that. But no, there's not a provision like that in this bill.
Just for clarity, the costs that are involved with that cannot be passed on to the customer, or they can?
No, sir, not in the normal course of business. Naturally, if there was some litigation down the line, possibly, but not in the normal course of business, no.
Any other questions? Yes, sir. Mr. Williams?
Thank you, Mr. Chair. I noticed that the word you use is elderly, and I'm wondering, does it encompass the disabled?
Yes.
In your language, because it used vulnerable adults, and I know that there are some individuals who are not only they're disabled, but they're adults too, but they're disabled adults.
Yes, Mr. And that's an excellent question. I apologize to the subcommittee for that, because that's just a term, elder financial abuse, that comes out because that's frankly what we deal with a lot. But this bill amends Title 43, which is in the DSS statutes. It amends the vulnerable adult statutes, so it falls right within that. So in other words, you are correct. It deals with vulnerable adults, which are those 18 and over that have some sort of identified, as you mentioned, disability, that causes them to be vulnerable under the definition. Right. So thank you for picking that up. This fits right within there. All those definitions would apply to this. So it is about vulnerable adults. It's not just about the elderly.
What is the genesis of bringing this bill before us? Have we been receiving from the different agencies some kind of alert saying that these individuals with this agency have been compromised financially? What is the red tape behind, kind of looking at this?
Well, sir, I wouldn't say there's any red tape on the state agency side. It's more about what those in the private sector, the financial services providers, are experiencing as they see. Of course, our population is getting older. Mm-hmm. There are more deposits and other activities, and they're seeing more fraud going on within that sector. So again, I'm speaking of the older, but we can apply to the vulnerable too. And that's what's really triggering this, is the need to provide the bank, the financial services provider, a little bit more ability to stop the fraud as it is going on.
Okay. What if the fraud is instituted by the agency itself, not an individual? How would that play a role in?
Well, naturally, anybody who's a perpetrator is going to be liable under the law. I've got to say, I've never seen that occur on the financial side. So I don't really have an experience to how to answer that. But certainly,
even though they work for the agency, but they're part of the agency who's taking care of them.
So I think the law is still pretty clear that any person that exploits a vulnerable adult, either financially or in other manners, is liable under the Title 43 statutes.
Okay. Thank you.
Chairman Sanford?
Thank you, Mr. Chairman. Mr. Williams, one of the things you need to be aware of is the Attorney General's office, and the Attorney General himself has asked for us to take this bill up because he sees it as being very important that we try to identify and stop as much of this fraud as possible against vulnerable adults.
Okay,
Okay. Thank you, Mr. Chairman.
thank you.
Are there any other questions? If not, thank you, Mr. Ashley. Thank you. Now we'll call on Mr. Ian Weschler, LPL.
Thank you, Mr. Chairman. Excuse me. I'm Ian Weschler. I'm a lawyer with LPL Financial. And just to give you all a little bit of background, LPL, we're nationwide, but we have I guess it's our second largest office is in Fort Mill. We've got about 2,000, give or take 2,000 employees there. We service 17,000 independent brokers around the country. And I want to speak just briefly in favor of this bill. This bill gives us another opportunity to protect our customers. Elder financial fraud, vulnerable adult financial fraud is rampant. It keeps growing. The crooks are smart. They're always out ahead. But this gives us another opportunity to, one, have a new channel to law enforcement to report suspected abuse, and then also gives us the ability to hold transactions or disbursements a little bit longer so we can investigate them. And also, on that point too, so we have an internal group, the Senior Investor Protection Group, that actually carries out these sorts of investigations. And we have this bill, the securities position of this bill is in place in, I think, 28 states now. So it's something that we're already doing. It's something we'd like to do here in one of our home states. And it would give us an opportunity to protect our clients more. And I'm happy to take any questions.
Any questions? If not, thank you very much.
Thank you, Mr. Chairman.
Now we'll call on Mr. Johnson Williams with the Attorney General's office.
Good afternoon. Thank you, Chairman. Jonathan Williams from the Attorney General's office. I don't have a whole lot to add to the discussion. This bill is important to the Attorney General. It provides a mechanism for broker-dealers and investment advisors to report potential abuse to the Attorney General's office and DSS. This is the second section that deals with securities. The Attorney General is the Securities Commissioner in the state. Don't really have anything to add. It allows, the bill allows for as Mr. Ashley was saying, a delay in the transaction up to 30 days, and then we can request another 25 days to continue our investigation. But I'll take any questions.
Any questions from anyone? If not, thank you very much. Before we entertain a motion, we have one strike and insert, which was brought about by Representative Bradley, Section 35-1-180, which says, if a qualified individual reasonably believes that the financial exploitation of an eligible adult may have occurred, may have been attempted, or is being attempted, then the qualified individual may promptly notify the agency. That's the only change brought on by Representative Bradley. With that in mind, question?
Yeah. Could Representative Bradley explain what his attempt here is so I clearly understand?
Yes, sir.
Go ahead.
Thank you, Mr. Chair. Representative Taylor, I'm in the industry and am concerned that the word shall pinned us to the wall in the industry in case we inadvertently omitted this type of elder abuse. The word shall, I thought, boxed us into a corner and created liability for people working in the industry if they missed it. So the word may gives us an out as far as having the opportunity, having missed that. We worked with the Attorney General's office to try and come up with the change of the word shall to may.
And they're good with that?
Yes, sir.
Any questions for Representative Bradley? Any further discussion? If not, we will go with the amendment first, and we would like to entertain a motion.
So moved.
All right. Any questions from anyone? All in favor? I think we have a aye.
Aye.
Any nays? Ayes have it. Thank you very much. Having said that, now we will go over the motion itself. Any motion to be entertained?
So move, Mr. Chairman, that we adopt S 425.
Okay, it's probably moved and seconded. That we-
Second.
Second, okay. All in favor? Show of hands. Okay. Any against? Any not voting? With that in mind, motion passed. Thank you, gentlemen. Meeting adjourned.
All right.
That Joe Jefferson can run a meeting.
Yeah. He knows how to handle it.
I'm trying.
You are a cowboy.